All right, we're
Hey, good
live.
morning. Good morning, everybody. Dominic Scafidi here, Content Marketing Manager, alongside Jonathan Crow, Director of Content, and Tom Watson, Channel Chief. Good morning, everybody, or afternoon, wherever you're at, and I hope you're doing well. We're going to kind of let people flow in here as we do housekeeping items this morning. Just had a little technical difficulties, but we're on take two, as Dan Comas says, in the audience here. So yeah, thank you guys for joining, and great to see some familiar names and faces in the chat. See Matthew Fox there. Good morning and good afternoon to everybody, depending on where you're at. So yeah, it's great for everybody to be here today. We have a resources doc that you can check out and kind of revisit after the chat if you're interested. We're going to drop that link in the chat for you periodically throughout this conversation today. This session is also being recorded. It will be made available after the chat on the page, so you can go ahead and view that if you want. We'll also have that in the follow-up email for you to reference as well. This is an interactive session. We have polls throughout this. We also have the opportunity for you to chat with us. So please take advantage of that. We want everybody to be as engaged as possible. We're constantly monitoring the chat as this goes on. There's people not on screen monitoring it as well. So please chat with us, chat questions to us. There is an ask question field down at the bottom where you can actually ask a question and we can push that on screen. Also, if you're comfortable, we'll be happy to bring you up on screen and you can join the conversation with us. There'll be a couple of points later where we'd be happy to have you join up here on stage with us and actually engage in the conversation that way too. So I see people filing in here. If you're in the chat, just go ahead and say hello before we kind of get started in the conversation. Would love to know where you're tuning in from. Would love to see where you're tuning in from today. So go ahead and let us know that in the chat.
Yeah, I see Matt Fox is tuning in from Lunchville. From
He's tuning in from
From,
Pizza French Fry Land,
Yep.
which sounds pretty good right now. So yeah, please just engage with us and connect with us as much as you want. And then, yeah, finally, we have these polls that we'll be referencing throughout the conversation this morning. So before we get started, just want to cover what we'll be talking about today. Tom's going to be talking about his MSC pricing and profitability calculator that he had used during his MSP days. This should be a great conversation. You know, we know everybody's favorite topic is pricing. So we're going to go ahead and get into that pretty soon here. It's been one of our most popular downloads in this year. And there are some significant updates to it that I think you guys are going to be pretty excited to see. Everybody in this chat is going to get a free copy of it as well. You can click that green bar down at the bottom of the screen. That's an Excel file, and you're going to get a free copy of this today. Highly recommend taking advantage of that. So without further ado, we can start getting into the conversation, starting with Tom here. It'd be great if you could just tell us a little bit about, your MSP history, and a little bit also about how the calculator kind of came about and has evolved since. So yeah, go ahead, Tom.
Well, welcome everyone. And this is my favorite topic when it comes to talking about managed services and managed service delivery. Because I remember the time that I went through figuring out costing, and that's why I'm here with this calculator today, is to hopefully help a lot of you kind of break that curve, save some time, and most importantly, make more money. So going back in time, I started my MSP in the year 2000. Prior to that, I had worked for government contractors as a network administrator and then for an MSP. And then I found out that one of the MSPs I worked for, the owner was getting ready to retire, and he had two contracts, and he was willing to sell them to me. And I don't know how he originally came up with the pricing on them, but they were highly profitable. And I basically paid the guy 30% over 2 years. And then the contracts were mine from then on. But I ended up with a situation where I added a couple more contracts in my first few years as MSP owner. But we got towards 2008, 2009. And then, of course, we got hit with the Great Recession, had a lot of problems extracting money out of clients because I was going to them after the work was done. We all know how that works out. So I decided that managed services was the key to growing my business and making sure that cash flow was good and I could pay my bills and have a repeatable process. So I took pretty much every managed services course There weren't a lot back then, but Carl Palachuk's and MSP University and several others, and there were a couple books. And I quickly figured out that I needed to do this, and I needed to charge a flat rate to clients for services. But I had a lot of apprehension about what is that price. I of course had these previous numbers from clients in terms of hours they were using and other things they were getting from us, such as software licenses. But I was just still worried that, you get a client that they're good for months and months and months, but then all of a sudden something happens and they burn through a lot more hours or something happens. And I needed to put it down on paper in a way that I could visually see where all the money was going from my end, and then calculate out what I should be charging these clients. And so I sat down and I built this cost calculator. And the cost calculator was a very rudimentary version. It's not at all like what you see now that we have, but it did tell me what it was going to cost me to deliver services on a monthly basis to clients. And it gave me some idea of what to charge. And it turned out even better than I'd ever hoped, because every time I applied the calculator, it ensured I made profits, and I never had to go back to a client and change the deal. Now, one of the ways that I used this calculator that I think was really important is that I went to clients I'd had for a long time, and I'd usually not look at their first 3 months of billing. They were on break fix. I would look at past the 3 months, and then I would also exclude any particular months where there was like a big project or something like that. I was looking for the regular maintenance, regular use of licenses, and I came up with averages, and I used those to figure out what to pitch them for a managed service agreement. And then at the same time, when I had new prospects, I would compare that new prospect to an existing client and what they spent or that was on a managed service agreement, and use that as the basis along with the calculator to figure out what to quote a prospect for a managed service agreement. Now, bringing us up to today, last year we presented the cost calculator. We did a couple of webinars about it. Very popular. You guys had a lot of questions. I know there were a lot of downloads of this from the Ninja website as well. But I looked at it this year and realized it didn't really cover security that well and NOC services. And also the big factor is, what do your technicians cost you? So we made major upgrades to those three areas. And so that's what we're going to get into today.
Thanks, Tom. And before we get into the nitty gritty, just want to take a second. I see people are still joining, so thank you again for joining us today in our live chat on pricing and profitability. I see people joining from all over the country, also Canada. So thank you guys again for joining us. Polls are starting to populate as well, so take a look at those polls down at the bottom part of your screen. Definitely engage with those. They're just populating now, so you can go ahead and engage with those polls if you'd like.
Yeah, basically we had another session, as you saw, set up, and we had that one crapped out on us. So we quickly whipped up a new one. I'm glad everyone made it into this one, and now I'm just doing furious copying and pasting as we speak. So I'm adding those polls in. I see that there is already some answers, which it's kind of a bummer. We're missing on that data, but apologies if you already answered in a previous room. If you don't mind answering here too, that'd be cool. And so, yeah, while I'm filling that up, also wanted to talk a little bit about, like, before we get into, obviously, the pricing calculator and walking through that, just wanted to stress another thing. This is a time for you guys to connect with each other as much as that it's a chance for you to connect with us and see what Tom has done and get that calculator. So we really are interested in hearing what you're doing, how pricing, what challenges you're running into, fixes that you're coming up with, changes that you're making, and obviously this is a chance to connect with each other and kind of figure out all that stuff too. So thanks again for interacting in the chat and the polls. And we also kind of have some larger picture stats that we want to get into. And maybe while I'll take a break from doing these polls for a second, and at least bring that on screen, and then Dom, you can kind of take it from there.
Sounds good.
All right, so let me share my screen, and I am going to bring up, here we go, the resources doc that we mentioned. And again, I can share the link to this. If you haven't been on a live chat before, this is kind of a, we like to have a document that serves as at least a loose guide to what we're talking about. And we're going to be populating this with links to resources. There's links to the calculator. There's links to a blog post that kind of goes through it. We're going to be populating live with links that you guys suggest. Like Dan Comas, thanks Dan for suggesting a book down there. If you scroll down to more resources, I've added that as well. So this is a document that you have now. It's also a doc that you'll have after this session's over. You can come back to and check out all the links to things we're adding in there. So while we bring that up, I just want to call out some stats here. We kind of wanted to see, okay, let's zoom out a little bit before we get really specific. Let's look at some larger trends. And so where do we go to get that? I mean, one of the ways is we are launching polls here to get insights on what you guys specifically are doing. But also let's look at some other reports people have issued. And one of the big sources is IT Glue, obviously owned by a competitor of Ninja, but that's okay. It's a great report. IT Glue every year puts out their global benchmark report. And so this is data that they released in May. And I pulled some screenshots from that. I also gave a link if you want to download the full report, you can certainly do that. But I pulled out some screenshots that kind of give a big picture from what they're seeing, at least in terms of their customers or the folks they surveyed. And we've got, first of all, net profit margins and growth. I mean, I know when we're talking about pricing, there's some numbers that everyone tends to focus on, right? And there's some benchmarks that kind of go floating around. And I'm curious to know if these benchmarks are still what people see as kind of being best practice across the industry. One number that we use in reference in the calculator is referring to gross margin. And that kind of a golden number to shoot for, I think, is 70%. Here we have numbers around net profit margin. And as you can see here, IT Glue is kind of calling out their top performers are getting around close to 30% there. So kind of curious to hear people react to those numbers. Are you even tracking like your gross and net profit margins closely? If not, or you're kind of curious how to do that, the calculator is going to help. But kind of curious reactions there. And then if we go up, another thing to kind of point out to in terms of larger, bigger industry trends, what's going on with revenue overall, right? I mean, we just kind of came out of a pretty big seismic change to everyone's life and everyone's industry, right? Still going through the pandemic. And so what's going on there? I mean, this is kind of interesting if we look at the smaller chart in terms of revenue, seeing how things have impacted. And at least in terms of IT Glue's customers, what we are seeing is there does seem to be a drop in the number of respondents who are reporting increases in revenue. So kind of curious, like, I think from a high level, we've done these MSP live chats. These are born out of, let's say, connected during the pandemic and figure out what's going on with everybody. I think a lot of people saw initial spikes in work and project work, specifically migration to the cloud, all that good stuff, and then some slowdown. And just kind of interested to take get a temperature check on folks. How is revenue looking now? Is it kind of returning to levels you saw in 2019? Are you still seeing negative impacts on revenue? These are the sort of things we're asking in the polls. And the last thing, because I'm rambling quite a bit here, I want to kick this back over to maybe you, Dom and Tom. The last thing I wanted to call out was this chart that says biggest challenges faced, right? And this is kind of interesting to me. They break it down. They include the colors here indicate the answers provided. 2020 Q1, this is pre-COVID, and then 2020 Q2 right after it, and then now in red, the current year. And you'll see some kind of returning to form here. But basically, lack of time being one of the biggest challenges, and a direct correlation, difficulty hiring good techs. That's a whole nother topic for another live chat, maybe. But the thing I want to call people's attention to is the pricing pressure here. I was kind of surprised to see this go down, right? So we see, 2020 last year, and during the pandemic, right around a third of respondents were saying that's a big challenge, is pricing pressures. They're feeling that a lot. And then that's dropped a lot. Is that what you guys are seeing too? I mean, did the pandemic in a way kind of help justify IT value? Are you seeing as much pushback when you're delivering price quotes to prospects or talking about price increases to current customers, or less pushback? That's a thing I'm pretty interested in. Tom, any initial feedback on that, or any initial reaction?
Yeah,
particularly around the pricing pressure.
yeah, absolutely on the pricing pressure. And you know, do you feel like you need to raise prices? I mean, my feeling is that MSPs are probably encountering some increased costs of doing business at this time, and you're probably going to have to look at what it's costing you to do business. That's where the calculator comes in well. How you need to adjust what you're charging your clients.
Yeah, absolutely. And I'll back away from this for a second. Well, one of the poll questions I was able to get in here was per user versus per device. This is kind of an age-old debate, right? And I think, I mean, Tom, correct me if I'm wrong, but like a lot of people have kind of veered into the per user category. But the reason I think this is kind of an interesting question to ask now, and if you look down at the polls, you can see that actually we've got per device is outweighing per user in terms of pricing, in terms of the folks here responding to the poll. And then, of course, a lot of folks are doing a mix of these things as well. But if we look back at those top challenges, and actually, let's see, we go back here. This is the chart I wanted to pull up. I'm interested with that per user per device dichotomy there. If you're charging just per user, and are users now having more devices due to the pandemic? Is that a trend that was already happening? Did it get accelerated like so many trends did via the pandemic? If we look at this chart, we can see, according to IT Glue respondents again, that number of servers under management, I mean, these aren't huge drops, but it's kind of steadily going down, right? So maybe that can be easily explained by virtualization, migrating to the cloud, all that good stuff. But we also see that number of workstations kind of fluctuating, number of endpoints going up. And so I'm just kind of curious for everyone, all the folks here on the line, is this reflect what you're seeing too? Are you seeing increases in terms of endpoints, devices, personal devices maybe? And is that impacting how you're thinking about pricing? Or Tom, I mean, maybe should it? Like if you're, you like to talk about if you're in operation day, if you're in the thick of it today, how would big changes to, okay, let's say you're priced by user, and all of a sudden your users are starting to have a lot more devices that are technically under your management. How's that impacting how you're handling pricing or how you're thinking about it?
Yeah, and we're going to get into some of the outputs of the calculator in a minute. They cover this, but I had some particular clients. I had like these Washington, D.C. lobbying firms, and each one of these people seemed to have like 4 or 5 computers, tablets, and they wanted everything to work right at the same time. And what I would do is I would pay very close attention to their numbers in terms of hours used and how that impacted the cost to deliver them service. And so when I ran across other clients that seemed to be device heavy, I took that into account and would often up my per user rate. But I still kept the pricing as per user. I didn't go per device pricing, but I used that as a factor to figure out what I should charge per user so that I covered myself, because the support after hours often are going to be higher if people have excessive devices like you'll see in some industries.
Yeah, that's interesting, and actually, so a question I'm very curious about, and I'm sure everyone is, right? We're just coming right out and going direct to it. I just added in the polls the question from the previous room. For those who are charging per user, what's your average per price? This is something that I think everybody coming, when you see that there's going to be a chat on pricing, I mean, this is kind of the question, right? And we should certainly kind of tap into this, because obviously it's going to vary a lot based on a lot of different things, including where you're based and all that good stuff. But yeah, I mean, Tom and Dom, we see like, this is one thing I wanted to address. I mean, we're seeing a lot in terms of, how do I put this? Like thought leaders or advice out there around pricing and what's possible per seat. And there's some pretty like hyperbolic numbers floating around, and a lot of that may just be to get people's attention and to make a bigger point. But yeah, Tom, any thoughts about that in terms of where should people be at in terms of their pricing? I mean, I know that's where the calculator comes into play, but in a broad range here, any advice there?
I mean, yeah, I kind of look at it, and I'm not going to tell anyone. I'm not a believer, as we've talked about, Jonathan and Dom, that there is one way to do this. And And you all have different clients. You have some clients you have personal relationships with or family-owned businesses. There's different things that come into account, different areas of the country. What's important is that you're making the profit you need to make on those contracts. And that's what the cost calculator does. If someone had to ask me roughly what I'm going to do in my area, I would tell them, listen, I'm not going to do anything under $100 per seat per month. It's probably going to be around 125 for these clients that have a bunch of devices. I might get up, or if there's more drive time to get to them, or different factors like that, I might be up around 150 to 175. I know that people go higher. It is possible. I would say those are kind of outliers when you start seeing around 200 plus. And my problem is I really want most of my clients sitting in that same area of pricing, so that the billing is similar, and so that when I'm discussing it and I'm quoting out to new prospects, that I'm staying in that same range, or for referral purposes, that if people talk amongst business owners, especially in a smaller community. I don't want to have a bunch of disparity with some at 100 and other ones at 250. I want to kind of normalize that pricing such that it works for me, it works for clients, it works for the sales and marketing process as well.
Okay, well, I mean, this goes right into another poll question I just added. And this is the tiered packages thing, right? And so, again, best practice that we see going around all the time from various places is it's all you can eat. Do the one thing. Don't mess around with doing multiple offerings. Don't do the good, better, best, bronze, silver, gold, whatever model. Just do one thing. Be standardized and go with that. I mean, that seems to be the message coming from some folks. But then others we see sticking to that. No, you want to give your clients some options, and there's going to be, to your point, Tom, maybe not one way that's going to work for every single client. So curious to see what people say. I mean, I'm going to cheat a little bit. I mean, looking down here at this poll results, I just launched this, so people were just answering, and thank you guys for doing that. But from the previous room when we had these polls up, we're seeing kind of a similar result. If you look at these results right now, people saying we actually customize an offering for each client. So that's going against that whole nope, it's one way or the highway type of approach.
Yeah.
Any thoughts around that, and how did you handle things when you were in operation?
Yeah, well, the situation that I had was that I decided in this 2008-2009 period to go manage services, but I had a lot of small clients. And then I had several big ones. The big ones, when I say big, I would say that's over 30 endpoints. On those, I did all unlimited contracts. But when I got to the small ones, what I found is you get like a 10-user network, and you can very quickly have a major problem like a server down or something like that. And it goes way beyond, the $1,000 or $1,500 a month you're charging them in terms of the cost to you. And you're not making money. So on those, I would cap the hours and then charge an additional hourly rate. And what it did was it made those smaller clients think about entering tickets, and it protected me in case there was a major problem. And that worked well in terms of taking a business where I already had a lot of clients and transition over to managed services. I look at it today, and if I was starting out, well, I'd probably be starting out with more resources and a pretty advanced sales and marketing structure. I would probably only take clients on that were above that probably 20 to 30 users, and I would do all flat rate pricing. That would be a second go around doing an MSP and not my first go around. I think a lot of people on this call are probably already in the mix of having clients. Some are break fix, some are managed services, some are small. They're trying to build up that following. So I think it's good to have some flexibility in there. I would just, I would have an overage rate and maybe have two plans. One is your all you can eat plan, unlimited hours, and the way you cap it is by you can only add a certain number of users under the same price. And then for the smaller clients, I would give them an outside number of the number of hours and then an additional discounted rate if they need additional hours from you, and thereby protect yourself.
Hey Dom, I know you've been monitoring the chat and the polls and everything. Anything interesting that's coming up in conversation, or any questions you want to address?
I see a couple people in the audience. I see Sandra and Antonio saying, no all you can eat. We've tried it maybe. but they don't do all you can eat pricing for a couple of different variety of reasons. And that's interesting to see as well. Taking more time with each client and offering like a specialized package is definitely a good idea. Also, just want to mention these polls. I don't know if we can put the polls up on screen, but one of the first poll questions that I think has a lot of a reaction to it is, have you raised prices in the past 12 months? And the most popular response to that one was no, but we plan to in the next 6 months. Would be curious to hear from people in the audience if that's maybe you're doing some secret shopping of your competitors in your local community, or maybe you're also just kind of looking around at how you balance out your prices, and this calculator discussion will help you with that. But that was an interesting takeaway for me to see that people have not raised their prices yet. I know that in many other industries across the board, they've already raised their prices because of the outside push of that pricing pressure that we're talking about. So maybe we've seen IT become a little bit more of an importance to the average, small business owner since the pandemic. I see also
Dom,
a couple. Go ahead, Tom.
And Dom, when it comes to that, I'd like to see how that compares to this other question we have in the poll. Are you seeing costs increase? Are vendors charging you more? Is it costing you more in some way to deliver services? Have you run across things that are? I'd like to see what is causing you to increase prices.
Yeah, I'm curious about that too. I mean, the big assumption, obviously with these poll questions, we're not getting, we're kind of limited. We want to keep them high level in general, but yeah, I mean, cost increases. Is it your current services are getting you're getting hit with increases there? I mean, another whole area we talked about, Tom, Dom offline was, hardware and what the demands on that and how that's changed and maybe impacting some things. But the big one I jumped to is, everyone's being told security, security, security. You got to have more of it. Now is a great opportunity to be selling more of it to your clients. And obviously, I mean, that can really kind of change the equation in terms of your prices and what you need to charge, costs you have to pass along, and also what you're offering there too. I mean, my kind of rebuttal or maybe second guess to that advice around having just one single offering is it makes sense to me, with the exception of maybe the security part of it. But I think even there, I mean, we need to be careful because I see some people advocating for, good, better, best, and having those lines drawn around security. And I think you got to be really careful because do you really want to have the good clients not covered in the basic stuff that everyone really should have?
Yeah.
You got to factor in the fact that you're going to have a risky client there too, and that's going to carry some serious risks that you need to weigh if you're not providing them with MFA, for example, or some basic stuff that really everyone should have. Now, of course, when you're talking about SOC as a service, or maybe some MDR and some more advanced stuff, maybe not everybody does need that, and maybe that is going to be more expensive. Maybe that does justify a second kind of offering.
Jonathan, that's actually one of my favorite topics too, because I wouldn't want to ever answer the question to an insurance company or to a judge or someone else of why did you think it was all right to give this client a lesser security plan? Because it becomes a liability issue right there.
Yeah,
and we've been hearing some cases of that.
Right, absolutely. And Ted in the chat is exactly right. Basic AV doesn't cut it anymore. I mean, yeah, the what you need to be passing on to clients and not giving them the option to have is definitely a conversation. Yeah, to your point about insurance, I mean, I was actually talking to Andrew Morgan from the Cyber Call yesterday, and he was showing me a questionnaire that a renewal form questionnaire from an insurance provider, and this was going to an SMB client who was looking to renew their cyber insurance policy, and wow, I mean, the questions they're asking, this wasn't a one-page doc. This was like a 4 to 5 page doc, and it was going into an insane amount of detail. It was asking about, SOC as a service, logging capabilities, monitoring. It's the standards are going up across the board, and I can only imagine that in order to keep up with that, I mean, you've got to raise prices, right?
Jonathan, before we jump into the cost calculator, I see one in here I'd really like to answer real quick. It's a little bit off topic, but how do we handle price increases when they're in a 3-year contract? I know Dan Comas is on, and he's got recent stories about this he shared. But my thing is, you have got in all of your future agreements, you have got to have an escalation clause that's somewhere probably between 5 and 10% per year that you're increasing to keep up with inflation, as well as just the increase in cost of you doing business and the licenses you get. It's very fair. I know that I never had any pushback on it. If it was a reasonable amount per year, it went up. And I know that Dan Comas, he'll probably mention we're going to have him on towards the end, that this is an easy way to make sure that you protect yourself going forward. I would even add an addendum to an existing contract, go to the clients and explain the need for it, maybe even show them, something, or talk to them about your increasing costs and how you're giving them more services than you had before, and use that as a justification and throw that on to a contract that's already in play.
Absolutely. I mean, that's what Tony here in the chat is saying too. Write agreements to allow for increases with appropriate notice, or as you point out, Tom, have it laid out there from the very beginning. Yeah, I mean, to your point, we definitely want to bring Dan on. But before we do that, do you want to jump into the calculator? Since
yeah, that'd be great. Yeah,
we're gonna love it. So how do you want to do that? Do you want to pull it up on your screen, and then let me see. Let me actually close out my.
If you've got it, if you could pull it up, that'd be great.
Okay.
Actually, I don't think I have that. I don't think I have that version on my machine.
All right, let me pull.
I know that sounds odd, but I think it got a couple changes on your end.
Well, to your point there, I mean, in talking about versions of it, I mean, this is something that you've been working on for quite a while. And those folks who have been following us for a while, and maybe you attended last year's chats around this when we first launched it, you're going to notice some changes. So yeah, let me pull this up on screen.
Well, yeah, I want to give a shout out too. So I do some MSP consulting, and one of my MSP consulting clients is Ross Danham of Huntley Technology Group out of El Paso. And Ross actually pointed out some things that we could really improve, and he's a real master of spreadsheets. And so he helped me come up with some changes in terms of what we're doing for his offering, and those are reflected in this agreement. He's not on with us today, but I'm sure he'll be watching the recording. But thank you, Ross, for your contribution to our new costing calculator. And what we've done here is we've made it a little prettier. As you can see, we've got a nice color-coded indicator here. And yeah, thanks. That's great. As you see, we've got some automatic calculations that are calculating your endpoints. Now, we're calling an endpoint basically anything that you could put RMM on. And I'm not just saying that because we're Ninja RMM, but that's kind of how I counted endpoints, because things that you put RMM on are the things that are going to provide, are going to require the most ongoing support needs. Whereas something like a router, you might do some support for it here and there, but it's generally set up and maybe patch it occasionally. So that's the basis of that. We have separated out, as you can see, tech support hours, because that is always going to be your biggest cost, or probably is, in terms of delivering service. And a little bit, we'll get into an additional calculator we have on here for figuring out those tech support hours costs. And there you go, technician hourly costs. We can go right into that if you'd like, Jonathan.
Is that where you'd like to start off, or do you want to kind of hit some of the high level here?
Let's run through the rest of this. So we've got your basic outward-facing stack here, and we put in just some regular things here that you would probably have. One thing to note is that this is a spreadsheet. That's why we have it this way. You can simply, click over on one of the numbers and you can insert a new row, and you can add whatever you need to in here. It's very flexible and forgiving. It won't mess up the equations as long as you do it that way. Something I like to talk about, if I'm starting an MSP today, for every new client I bring on, I'm going to try out to use Knox services for help desk and see how that works out. And so we kind of separated that out so you can, because you might have several different services from them. So we've got subtotals along the way down through this now. That's a new upgrade to this. And since security is such a big issue, and we're really focused on security offerings, we've got that in its own section in here. And also because something I've been talking to with some of the MSPs I work with is having a cybersecurity stack that you might sell on its own. So you can use it for that purpose. Now, getting down into some of the regular equations, your cost of goods sold, but I want to show something in particular. In your commission, if you're paying a salesperson, my recommendation is that you figure out the commission. That's just an example, and that I would pay that amount each month out over probably the first year and have the salesperson involved in some level of account management to continue getting that commission. As long as that client stayed on for the full year, they get paid on that contract for the first year. I assume most contracts are 3 years long. Wanted to go in here too. I spent some time this time on, I've got these per seat and profit and overhead. And then I broke it out by the endpoint costs too. So you can see, and this is where I like these calculations so that I've got a client that tends to be pretty device heavy, even if that I can start to figure out if that is affecting how I'm kind of charging. Because one of the things that I always did with this calculator was, for a new client, I would go back to this approximately every 6 weeks and I would run their numbers and see what they were doing now. So what I want to see is over time with the different, I'll add just another tab on this spreadsheet. I want to see over time that a client is becoming more profitable. Because the way I view managed service agreements is, if you're servicing them well and you're doing a lot of proactive maintenance and you've got a lot of automation built in, then what's going to happen to repair, then what's going to happen is your tech hours will drop over time on the contract, or they should, thereby increasing your profit. And then you can use that as a model for other clients you take your managed service agreements to.
Yeah, and Tom, I'll just jump in really quickly to say, highlight what you already pointed out at the beginning here, that this is really to get you started, right? We saw in the polls there, a lot of folks are challenged with, how do I even figure out what I should be charging? How do I get a better hold over this? Not all of these, this is meant to be downloaded, which you can do, right? If you look at that green call to action bar, you can actually download it. That will download the Excel file, so you can open it right there. This is meant to be adapted. So Tom pointed out you can add rows. Don't think that because maybe this has sales commission and maybe you don't have salespeople or you don't have some of these things, don't let that discourage you or trip you up at all. Tom, the big things, right, are just having your main costs here, your COGS, if you will, and then you're really looking at, okay, here are the numbers I can start playing with. If I've got a certain profit margin I've got in mind, that's kind of it, right?
Yeah, and then as you see there, that profit percentage this is kind of a gross profit, and it turns green. The box turns green when you go over 60%, because that's where I like to say it's not really your net profit, but it's giving you idea of, after all of your costs for your technicians and the basic items in your stack, where that profitability of that contract lies. So I like to keep it there. If you don't have a salesperson, just put a 0 on the percentage for sales commission, and then it will zero out the next one in line and remove it from the calculation.
Absolutely. And so, tech costs. So as you have pointed out frequently in the past, one of your biggest costs, right, is not necessarily the tools in your stack. It's your technician time, right? And so this is a huge change, and we're going to open this up, and I'm going to give people a little word of warning. Don't be intimidated. This is going to look kind of crazy.
Yeah.
It's going to be okay. Tom's going to talk you through it. So this is a big new addition. This is a new tab. A way to figure out your true kind of technician cost. Take it away, Tom. Let's break this sucker down.
Yeah. Now, what we mean here by levels. Yeah. So before we had this, and it just covered a 3-person MSP. It was very basic, but we looked at this and realized that, listen, we have people on this live chat that are anywhere from 1-person shops up to, I know some people on here have 20, 30, 40 people, and they might have technicians at different pay levels. And also something that I think is very important, we do know that we're having people that have technicians move to other areas. And once again, Dan Comas, I know, has a great story about that. And then we were actually talking about, I know Dom and Jonathan and I were talking about this yesterday. We were talking about the cost of living factor. And there's been articles out, many of you have probably seen, how Facebook is looking at remote employees have moved out of the Bay Area and possibly adjusting their pay down. Well, if you need to figure out what you're going to charge, what you're going to pay a technician, we've got this handy website with a cost of living calculator. And I know, Dom, I know you enjoyed when we went through this yesterday and had some thoughts about that based on the areas you're in.
Yeah, and I just want to shout out Victor. I mean, he was ahead of the curve with his comment just now about saying, he likes to have an automatic percent increase in there, basically for COLA, for those to cover the cost of living increases, employee raises. So, he was kind of ahead of the curve on that comment there. We see across the board, I mean, price of living going up across the country. You could throw out stats anywhere you want. But the cost of rent is increasing, cost of goods, cost of food. So yeah, having that COLA factor in there is very important, and it also will help you understand. Maybe you can even turn down wages for employees that you might be hiring out in different parts of the country. I mean, you could do a comparison here between,
Yeah.
let's just say, Omaha, Nebraska, and New York City.
Yeah, exactly. So what's great about this is even if you don't have someone move, the idea is I think some of you out there that I've talked to are hiring technicians maybe in other areas, and maybe you don't know maybe what you should charge them. So an example I think might be maybe you're paying $60,000 in Akron. Yeah, like I said, they moved to Las Vegas. In just in terms of even before you're putting the calculator, but you want to figure out what you should put out there as a range for paying for that job. If you take into account the cost of living, it might real quick give you an idea of what you should be paying for a technician in another area.
Yeah, I mean this is something a rabbit hole I kind of fell down into. It's kind of fun to play around with it. But yeah, I mean some of the differences here are quite large, and I know talking
Yeah,
with
like
some MSP owners that I mean one of the consequences with everybody being remote now, of course, it adds some complexity in terms of taxes and things like that. But I mean, the idea that you can be hiring outside of your area is something I know that's on people's minds.
Yeah, I think it's great. Actually, I had a friend who owned a web development company, and this was like 15 years ago. He was getting web developers, and particularly he was hiring them in areas of the country where they needed work, they had skill sets, but he got a better deal for himself, and it was good for them too. But he would use something like this to figure out what to charge them, and then you punch that back into here, and you use that to figure out, along with all of these things like the rent you're paying and all of your taxes and all those things. You put those into the calculator here, and what you're looking for is to figure out what those technicians cost you. And if you scroll over to the right, Jonathan, we get the average. And so you punch in all these numbers, and we've got example numbers. If you had all these different levels filled out, of course, if you don't need to fill them out, just zero out in it's the kind of peach colored boxes. Is that right, Jonathan?
That's right, and also just a quick point there. I don't know if anyone asked about this, but when you're saying levels, you're not necessarily referring to technician level in terms of
No.
support level 1, 2, or 3 of a tech level. It's more these are different pricing options because
Pay
as you
level.
pointed out, exactly.
These pay levels, just because with the old calculator we run into, it only took account for like if you have 3 people in your MSP. If you've got like 10 technicians, and you'll probably find that a few of them will be at the exact same pay and maybe a couple of outliers, all of a sudden you need to have ability to take that all into account, because what's important here, as we know in delivery managed services, generally that hourly cost of technicians is your largest single cost in delivering IT service under a contract. So we really want accuracy on that value that's over to the right, that average. And as you can see, when it's all said and done, it pulls up this $53.52 per hour to deliver service. And that, as you see, it's a yellow box. It feeds automatically over into the first one. So we got really fancy in this spreadsheet here, and we actually got to carry a value through. So that's another upgrade. I know it doesn't seem like that big a win, but it took some work for us.
Yeah, absolutely. And I think with that, I mean, we'd love to hear some questions. I do see. Again, just want to remind people, you can download the calculator. Tom has obviously been great about going through it right now. But there's also, if we go back to that doc, that resources doc, there's an additional blog post that kind of walks through things too. And Tom, I know you made a video that kind of goes over some of this stuff too.
Oh yeah.
And then of course, we've got your email address in that doc. If people have some issues or questions, is it okay if they reach out to you?
Absolutely, yeah. Any questions you have, feel free to reach out to me on LinkedIn. Just type in Tom Watson Ninja RMM and connect with me. or you can email me directly at tom.watson@ninjarmm.com. More than happy to talk to you about it. I don't charge for that kind of thing. I'll even jump on a quick call or run through an example with you. The reason why Ninja has me on is to be there as a resource to you all and to provide you something. And I'm not going to pitch product to you or anything else like that. I just want to make sure that people out there, especially MSPs that are transitioned to managed services or startup, that you guys are making the money you need to make. I want to help you make sure your profitability is good so that you can grow your business.
Absolutely. And I know everybody appreciates it. Sandra gives you a big thank you. I love seeing Sandra here. Thank you, Sandra, for being.
Now we can punch this in. Ernie's got a question. Maybe we can change that to 150 per user and see what happens to those values. So maybe we can look at those values at the bottom.
Just want to mention real quick that calculator blog and instructional video that Jonathan mentioned a minute or two ago is in the chat. That link is in there.
Yeah, thank you.
We'll be sure to include that. Yeah.
All right, so what do we got here? So
we already got 150 in there.
Yeah, we're already at 150 per user. What would the per device equivalent be? I'm not sure I understand the question actually. So I guess Tom, backing up, we had the poll. How many people are actually doing per user pricing versus per device? Maybe that's where this is going. Is that what you're asking?
He meant by device.
Well, yeah, it's monthly revenue per endpoint then is $97.83. So that's what you're taking in. So if you were charging, you'd charge right around $100 per endpoint. Because of course, we have the users, but then we have a few servers. So the servers add on the additional endpoints.
So that's the best way to go about it. If people are using per device, maybe what we could do, Tom, is do a slightly different version of this, or maybe it sounds like that's a simple enough fix. But that's something maybe a takeaway for us.
Yeah, I mean, we could transition and make a second one of these that's per device pricing. I like it. It's another live chat, Jonathan and Dom.
Yeah. Okay, well, here's another Victor. Thank you so much for putting this in the chat. Talking about technician retention. I mean, man, this is when we were talking about Dom, right? We were kind of looking at our schedule and hiring and retention. Based off things like comments like this and also the stats we saw from IT Glue, like hiring and retention is a big issue right now. It seems like that would be worth a chat on its own. Finding new tags, Daniel says they're good with keeping who they have, but finding new ones. So, yeah, I mean, I think that's a topic we can certainly cover in the near future.
Well, Jonathan, real quick on that one, I think it goes back to what I was talking about. I would probably look to take my help desk technicians that primarily work remotely, and I might be looking for areas of the country where they have very good vocational technical training in IT, but maybe they don't have as many jobs. And then going after an area like that where then you market and have those be pure remote technicians. And then in your local area where you need to sometimes roll trucks, hire the other technicians for that. I think you might be able to get around that problem.
Let's bring up, I'm going to search out Dan. And Dan, if you're still on the line.
Oh, yeah, we need to have Dan come on. I've already mentioned a couple things he's done, so.
Yeah, Dan would be. Dan's always great to have on here. So, Dan, I sent you an invite. And yeah, I mean, going back to what discussion points. I mean, I know Dan can talk about all these things. He's gone through the Knox services recently, but I think that what you wanted to have him talk about, Tom, was going back to a couple of things. First of all, contracts. I know he had some really cool success with putting in the auto escalation and the 3-year commitments. And here he is. I'll let him speak for himself here.
He's got plenty to tell us.
Dan, thank you so much for dropping in again.
He's right in the mix. Whereas guys like me just talk about it, Dan does it still.
Yeah, we sure do. So yeah, we on a point we brought before, we had a lot of renewals earlier this year with a lot of our bigger clients. They just happened to line up towards the beginning of 2021, and we got 3-year agreements with price increases, auto escalations from some of our biggest clients, and we also got 0 pushback. So just a big point for everybody who's afraid to do it, which I think that's what it is for a lot of people. I don't know if you're just uncomfortable saying it or not. I think people are genuinely just afraid to ask for more money because they're afraid they'll get replaced. That's a possibility. It's just a possibility at any time. And if you put yourself in that position, it's just going to work against you. But if you present your pricing and you can defend your pricing and you're transparent with it when you present it to your customers, you'll see success. And the more I think you embrace that kind of mindset with pricing and renewals and raising your fees, it'll work for you. It'll work for you more often than it won't.
Well, going back to thank you for sharing that, Dan. And Dan, I know you shared that in the Slack group a while ago, and I love seeing that because to everybody, I'll give this a shout out if you haven't joined yet. Again, in that resources doc, you'll see at the top, you'll see how to get in touch with all of us, and then you'll see there's an invite to a Slack group where we can keep these conversations going. And Dan shared that success story in there, and that was awesome to see. So thank you for doing that, Dan. Looking down at the polls here, there's another thing I know that you had. You were talking with Tom about having some recent experience with people having a challenge of dealing with legacy / unprofitable contracts. I guess it kind of goes hand in hand with what you're talking about with facing renewals, but
Yeah,
it sounds like you had a story to share there.
yeah, I voted on that one for sure. We have a client. I mean, the dirty details, right? We have a client that we've been charging about $300 a month to do backups and some endpoint protection. 7 machines, 1 server, really nothing to it. They open 3 tickets a year. They're nice people. They've been with us forever, back in my earliest days. So we never pay much mind to it. It's like, okay, it's there, it's fine. But, as we've put the attention to our bigger clients and made sure that our stack was improving, that our services were improving, that we're focusing on security and best practices, the little clients tend to get handled last. Right? Because that small dollar amount on your monthly recurring that you're just like, all right, it's there, whatever, it's fine. It'll still be there no matter what I do. Well, the more attention you pay to it, the more that gap starts to grow between them and what you're doing for everybody else. All of a sudden, you're offering 2 completely different scopes of service. Your techs are confused about what they need to do for who. You have people performing all kinds of work for this client who's not paying for it. That's my fault. That's not their fault. That's not the client's fault. That's my fault for not being clear and keeping their contracts up to date. So we had this client that we were charging $300 and it was just technically profitable. But after we reviewed everything, I circled back with them. I said, look, it's time. Here's the situation. We're just not doing enough here. You're in a bad spot. We can't continue to support you this way. The new rate, it's $1,000 a month now. And this is what we're doing for you. And you laid it all out. And I outright told them, like, look, we've been doing this forever and you're not profitable for us. So I can't continue to do this in my business, without being profitable. And I said that I took the line from somebody. I wrote an email to him and I wrote a line, and I know I got it from somebody else, but it was, I need to be able to say that my company is doing enough to keep you safe. And right now I can't do that. So until we get you up to speed, so to speak, or either you come with us on our terms or we can't help you. And if you don't want to come with us, that's fine. I respect that. And I understand. And we can still, keep in touch, and I'll still refer business to you if I can in some other capacity. But we can't be your IT provider anymore. And
Dan, I want to comment on that because that's a great thing. It's very hard for managed service providers to do, is have those really difficult conversations with clients. And it's tough. And if you've been charging the wrong thing, the best thing you can do is fall on your sword and go out there and say, I can't do this because we aren't making money. And then often when people hear that, they're going to expect that you need to make money to continue the relationship. And once you kind of do that fall on the sword thing, then you can come back with, I'll charge you a very reasonable rate, but I need to make, like 20, 30% on what I'm doing or something like that. And then you give them the new rate and it'll often work out for you. I often hear from MSPs that they're telling me, I don't want to say to this client about the billing because they're my best client. And I like to say, well, if you're not making money, then how are they your best client? I mean, your best clients are not only the ones you like and they've been with you a long time, but they're the ones that are willing to adjust with you and to make sure that it's a win for both companies and pay what is going to make it a win for your company, because knowing that you need a certain amount of profit in order to deliver a certain amount of service.
Absolutely, Tom. And this client is on they're always, I told them they're going to have a perpetual discount from now on because they're priced so low. forever and ever, there'll always be priced lower than what our standard is. So we might make 60% margin on this client, whereas we aim for 80% margin on another client. But we know that the degree of difficulty with them is going to be low. So the same, let's call it one server, 10 computers, the same one server, 10 computer client that I'm charging an 80% margin on, I might actually make less money on than this company where I'm getting a 60% margin. So it works out. They're happy. They understand us. We understand them. It continues a very long-standing relationship. And the bottom line is that both parties are getting what they need. And that is the most important thing of any agreement that you make with a customer. Agreement, the first 5 letters of agreement. Agree. It's a positive thing. It doesn't have to be this contentious, dollar-driven back and forth. You're providing a service and they're satisfying a need. Put it on the table. Be transparent about it across the board. And if they're not willing to do that, then maybe you're better off walking away. But if they are, and most are, you usually wind up with a pretty positive outcome for everybody.
And so, Dane, just to confirm, so those you still do have that client? They came around to that? They were receptive?
Yep. They finally signed like 2 days ago. They thought they signed a week ago or something. But yeah.
So, how much did it start out at, Dan?
$280.
And now it's how much?
Just like 1,000 change.
It's amazing. It shows you what and you there was a certain amount of you being very open with your situation to them, and that sounds like that kind of closed that.
Yeah,
you were transparent about where you were as a business.
Yeah, and owning it yourself gives you the confidence to walk away, right? I think that's a challenge for a lot of people, and I certainly had that issue for a very long time. But the more transparent I am with the services that we provide, the more confident I am in what we do as well. Therefore, if you can't meet our profitability requirements as a business to do business with us, then we can't do business. And that's totally okay.
Dan, thank you so much for oh, go ahead, Tom. I will note we were right on 2, but okay. Yeah, maybe some final thoughts.
One thing I wanted to mention was something I use the cost calculator for as well, is if you have existing clients, you run them through there on the past numbers, you might find that you have some clients that just don't fit into managed services. Like I like to say, I like to deal with offices that have professional services where they make their money at a computer. You have some entity where they don't enter a lot of tickets, or they don't do something like that. And maybe the regular managed service agreement, full stack, doesn't work for them. That is one place where I would pivot to a prepaid managed service agreement, which I then gave away RMM for free because that gave a level of proactive support and it drove ticket creation. And as a matter of fact, I wanted to mention that we have a prepaid hours managed service agreement up here on Ninja, and you can download it. In addition, at some point, I believe we're going to have a live chat to go into more detail about it as well.
Yeah, and I'll definitely, I've added, I dropped a link to this blog post in the chat, and I'll certainly add the link to the resources doc, and I'll put the agreement in there as well so people can check that out. But yeah, great point. I'm glad you brought that up, Tom. And Dom, do you want to tell folks about, while we still have a little bit of time here, our next live chat, right?
Yes. Before I do that, I want to say thanks to Dan for offering those actionable tips. Those are the ones that I love to talk about all the time. A lot of people talked about that dread of letting go of some of those clients that might have helped them start their business long ago, but now aren't fitting in anymore. So those are certainly some tips that hopefully people can act on and get rid of some of that dread. Next live chat coming up Thursday, August 19th, 1 p.m. Eastern, 5 p.m. UTC. We're going to do a little gone fishing event, kind of like Summer's Last Stand, let's just say. We're going to do a little bit of a deep dive into some of the latest lures and fishing tactics that we see out there, some light security awareness training, and just some identification of some of those fishing tactics that emulate vendors and MSPs that we need to be aware of. So hope to see all of you there, and we'll have some stuff coming out about that very soon.
Yeah, definitely. We're going to have Art Rose from Breach Secure Now join us, along with maybe some other guests too. So yeah, like Dom said, it'll be really cool deep dive into some of the latest phishing campaigns going out there and the trickery there, but also some tips around selling security awareness training. And again, as always, want to hear from everybody here. So we'll probably dive into the Slack group and get a little bit of advanced discussion going. Just kind of curious, are people actively selling security awareness training? What are you using to do it? will be a good discussion to have in a couple weeks. And then it sounds like we got to start talking about hiring and retention, because I think multiple people in the chat said that would be a good one. All right, but Dan, thank you so much for coming on again. Once again, sir, you are the man.
Oh,
Thanks,
always a
Dan.
pleasure, guys. Thanks for doing a great job.
All right, and Tom, I want to take us home with just a final call to action and reminder about the calculator, and anything else you'd want to say.
Yeah, with the calculator, listen, I'm always looking for ideas and improvements. We're certainly going to take into account that some might be doing more per device, and see if maybe we can come up with, in the coming months, some type of version that kind of does things a different way to accommodate different styles of costing, because that's the message I want to get across here. There are a lot of so-called gurus and coaches and experts that are telling you there's only one way to do it. And as a matter of fact, I had someone the other day told me that the prepaid hours was so 2003, and I just don't agree with that. I agree with my feeling is that you're going to have to find what works for you, and you might have certain clients where you need to get creative and you might need to customize agreements. Having some set ways of doing things are good, but some flexibility is probably going to allow you to grow and scale your business. So feel free to reach out to me about the calculator and questions and ideas for it, and go out there and make some profit.
With that, thank you everybody for being here today. We'll see you on Crowdcast on August 19th. Looking forward to it, and we'll continue the conversation in that Slack group. So everybody have a great rest of your Thursday and a great rest of your week.